We are discussing Nio, another earnings recap as we head overseas to the Chinese market. But we're talking EVs now, and apparently not as optimistic.
Not as optimistic, and I will say that Nio's year is now looking not as optimistic, as it's been met with some pretty serious selling over just the course of the last month, and now seeing some different performance based like an XPeng or a Li Auto. They're not necessarily trading in tandem as they once were, but here to tell us now more on these results, I'd like to welcome in George Tsilis, senior markets correspondent here for the network. So George, we already have their delivery numbers. They did give some optimistic guidance about some of their new models that they unveiled in the last quarter, but obviously not enough here.
It's not enough for Nio. I mean, we talked about XPeng. I think we talked about all the Chinese automakers, the major ones. Nio, of course, is the other one, which really caters to the luxury brands with their sedans as well as SUVs, which they're rolling out. But they've had some problems and hangups in terms of rolling out new product lines, and that's actually caused Li Auto, which actually may have a little bit more of a value proposition for consumers. They have a little bit more variety for all consumers in terms of price points, whereas Nio focuses on the luxury brand. So I think if you look at the report, it's to be expected the stock is to the downside. It's coming off the lows. I think that's important to note here as well. But if you look at the earnings per share, the estimates were around 36 cents. They missed that, and they actually lost 45 cents. Now, that's nearly double the losses last year at 24 cents. So that's not good. It's actually getting worse for Nio, at least this quarter, compared to last year. The other thing is top line sales missed as well, 1.21 billion versus the 1.35 billion compared to last year. So that was 19% down compared to last year. The other thing is along with sales being down close to 20%, you can actually see sequential declines of about 23%. So quarter over quarter, sales were down as well as year over year. So both those don't bode well for Nio. But at the end of the day, they did reaffirm their guidance for Q3 deliveries, which at the midpoint is about 56,000 total units. Now, I went back and looked at the same quarter going back to 2022, and it was around 40,000 units. So they are increasing their sales growth or delivery estimates for next quarter. But I think this quarter has presented a challenge for investors because it looks like to me, based on the missed sales numbers alone, they've had some delivery challenges. And we talked about XPeng as the same kind of situation where deliveries were down year over year, at least for the first couple of quarters of the year. But the guidance actually for the next quarter and going forward for the second half of 23 is much improved. And so lastly, I'll say this. We talked about the aspects of technicals as well. If you look at the 10-week moving average for XPeng, or XPeng, if you will, XPEV stock. We talked about that 10-week moving average as support. One of the things about Nio is it's actually broken below that 10-week moving average. So that doesn't bode well, at least for some near-term momentum.
George, when you look at this seems to be a situation where the stock is starting to take a step backwards. It's not taking a series of steps forward like we've seen many of its peers, notably Tesla, almost seemingly never take a step backwards throughout its history. This was sort of that first real name in a public space that was presented to us as a new kind of threat to Tesla, or maybe even, hey, this is your chance if you miss Tesla, look over here. This is a very similar company. That's kind of how it was positioned. I remember when it first came public. It's been public for several years now. But I'm looking at a situation where, you talked about the sequential declines, but we know that there's some nuance to the time of the year in terms of which seasons are maybe getting more sales. So just comparing to the year prior, I mean, a 6% decline in vehicles sold, Tesla didn't have a lot of those type of hiccups in its history. It's typically always been, pedal to the floor in growth. But not only is it not growing now, or at least it hasn't this quarter, it's actually a less efficient business. I'm looking at a company that was in the 13-14% gross margin range, is down at 1%, which is way below the expectation. I mean, they're going the wrong way. It's seemingly everywhere, George.
Yeah, and that's a good point to bring up. I mean, look, so if you think about Tesla, what they did is they did a phenomenal job in actually lowering prices. And the reason they can do that is they're going to make up for the difference in higher volume growth. If you just look at the run rate estimated by the midpoint for Q3's deliveries, I'm just going to throw out around 200 to 220,000 units. Tesla is expected to produce about 1.8 to 2 million units this year. So it's about 10 times the size Tesla is of Nio in terms of deliveries. But at the same time, one of the things about Tesla is its top-line sales have been improving as average selling prices have gone down. That's not been the case for Nio. Average selling prices are down and total revenue is down. That's a twofold variable, or two variables that are going against you. And that's going to trickle down to margins, and that's why gross margins are severely depressed. Even in the last year, with this quarter being a very low gross margin print, is about 6.5% compared to averages of about 16%. So that's not good. And from an operational metric standpoint, last year the company, including the quarter they just reported, lost about $2.3 billion in operating income on about $7.3 billion in sales. So it's in financial strain. It's not in trouble. It's not in a terminal decline, but it's in a strain right now. And I think that's indicative of the technicals as well, because like I said, the market seems to agree with that because it's broken below its 10-week moving average, whereas Li Auto, out of the three Chinese automakers, has phenomenal growth, and I think that's why it's outperformed even Tesla.
Yeah, and George, even its 200-day moving average right now is sort of starting to dwindle off, losing some overall steam here. So that weakness you speak to, I mean, it's down 31% now this month, and obviously today's move higher or lower, not aiding sentiment here, as we did see this earnings catalyst that was not enough to excite investors. But we will leave it there. Really great breakdown on some of the disparity we are seeing in the overall Chinese EV space, with Nio lower on the session by about 4.5%.